Good afternoon. Welcome to Options Center. It is Thursday after the bell, 12/29/22. We have one last trading day of the month. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. Excuse me. So we're getting whipped back and forth. And so, you have to adjust quick, trade light, and, leave some powder for yourself so you can make it in this game. And I'll show you when we get to lower time frames what had happened yesterday, what had went wrong. We had some damage control to do in the morning, using futures to hedge our options positions and such. And then with such a powerful day, we reversed at the end of the day. Why would we reverse? Because we see another leg down. When the market gives you information, that's all it is. That's all we're feeding off these charts. We're taking information, and when it gives it to you, you adjust to that information. You can't ignore it and just stick with your guns. You have to give what the market tells you. Okay, so enough of that. We're going to go through ES on multiple time frames as usual and end off maybe with the Elliott wave count if we have time. Okay, ES on that monthly time frame. We're still in the channel. Lower highs, lower lows. Underneath that 8 EMA, our next target should be right back to that 50%. And to get into that area, it's going to take some time. Things take a lot longer than you think with the because nothing goes in a straight line, so it takes time to go up and down, up and down. Let's go down to the weekly. These haven't changed. I've been saying the same things. I know I've been repeating over and over on the daily time frame, the weekly time frame, but just hear me out. And when these change on the weekly and on the monthly, then I change. But for now, lower highs, lower lows. We're in a bear market. We're in a downtrend. You notice we're having trouble. We're making this bow and arrow that we talked about the last few days resistance. It's now resistance with that 8 EMA and the 20 simple. We have an inside week with 1 day left, and a good chance that we just have some maybe I'll call it sideways trading to end off an inside month or week tomorrow, and then continue on with trading on Tuesday next week. There's a good chance of that. It doesn't have to happen. We do have some quarterly options that are expiring, but the only notable on the SPX is 38.35 on SPX. So if you want to take note of that, that's a good chance that's where we just end up at the end of the day. Whether we make a big move down or up, we'll probably end off in that area. So enough with the weekly. We're right in the middle, neutral point. We can break out of this triangle, break down from this triangle, but we're right in the middle. We're still in a downtrend, so I favor the downside. Daily trend is our friend. Once again, we had this this big move here, broke down from the channel, and all we are is consolidating here, back and forth, and you'll get a better visual on the 65-minute chart. But we're having trouble with that 8 EMA. We came back to test it here, 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 and once again here and here. Price is trying to move up, but it's getting denied each time. So we have to take that for what it's worth. We thought we were breaking down yesterday, but something else happened. So on a bigger picture, what the bulls are going to be looking for is that this is a 5-wave move up to here. and then a 3-wave move here for an A down, B up, and a 5-wave down for a C. And then that would give a 1, 2 setup and much higher for the wave 3. That's what the bulls are looking for. The bears are saying this is the top. We have a 5-wave move that we're doing. We'll correct a little bit and have a much bigger wave 3 down. That's kind of the big picture that we're looking for. And we're okay with either outcome. But, we just want to make sure that we're on the right side and listening to the charts. So let's go down to the 65-minute. See what else we can learn. All right. I think the shape gives it away. Okay. That's what we've been doing all week. We've been consolidating, and just with it being holiday week, we could have a nice big move in the morning, but something tells me that in my mind, that will come down here. This is how I'm playing it. That will come down for a small wave 1, and we'll end up maybe with the wave 2, like right in the center or something of that fact, to where we got our move started, but we come back and it looks like we're neutral and we're right in a dead zone for the weekend. We'll see. We'll play it out. This very well could just play all the way through to where we get the move that we were anticipating. And but the thing is to look out for price. We're going back and forth here, and we break above and we go, break below, we go there. That's what we're looking for. It's simple as that. And if we get on this, if we do counting the Elliott wave, there's always different ways to count it. This is what I posted in the Patreon earlier. We have the 1, 2. Sorry, let me fix that. That would be wave 3. And all of this triangle would be wave 4. Very typical to have a triangle wave 4. So that's an A, B, C, D, and E to complete the triangle. And that would bring on a continuation to the around the 618. That's what I'm aiming for. That's down by the 3700 area, 3730. And that kind of coincides with the 100% extension of wave 1. So wave 1, when you have a nice long wave 3, has typically moderately about the same, approximately the same length. And that would put us right there at the 618 retracement. And I think that would be a pivotal point. So that being a pivotal point, maybe that's where we'll just end up tomorrow with the PMI in the morning at 9:45. That could be a good catalyst. It doesn't matter to me what, good news is bad news is good news. I don't get too much into that. PMI is hot, therefore rates will go up. But I think it's a double-edged sword. PMI comes in really low. That's the economic indicator slowing down. That could just do the opposite. And any huge move in rates is just going to affect a different part of the market. Rates are high. They affect tech, and they're good for banks. Rates extreme low affects banks and is good for tech. So it's, that's just something that might just confuse. It's nice to know, but either way, the charts tell me what I need to know. So I'm looking down, excuse me, for a last wave 5, a 5-wave move down to around this area. And that's very pivotal, because if this is 618 retracement from the bottom of this huge move here to the top, then that's pivotal, because this could be a wave 2, and then we go much higher, or we this is a wave 1 down, and then we retrace for a wave 2 and head much lower. Either way, this is a great setup for the upside, because either way, we're looking to go up, whether you're bearish or bullish. And so that would be a beautiful setup if we got down to this range, this territory, or somewhere in here. And we started, we'll definitely set up for the upside. And maybe that's a few rally days into the new year, or perhaps earnings. And then we start to come down after that. So that's all I got for you today. New information, then I can tell you more. So that's what I see. And I thank you very much for all the support. And don't forget to like the videos. Everybody's been doing such a wonderful job. And I hope this helps. Don't go all in on trades. I know that I seemed very bearish last night. But we held right at that 50% overnight. And that's what gave us more information, because we held right here as well, and something else was going on. We're still consolidating. So that's our triangle. It's a continuation pattern. We look for the downside, but if we break above the triangle, we go long from there. Okay, thanks for joining us here at Options Center. Have a wonderful evening. We'll talk to you tomorrow.